The market did something extraordinary last week. We're going to take a look at to see what did it do that is so extraordinary, and also did the market gave the bear a head fake and trapped them when it dipped down on Monday and then run it all back up. Did they did a head fake on the bear, or is the real head fake is yet to come? So we're going to take a look at that. So stay tuned. Let's take a look at this index chart here. As you can see, the Nasdaq 100 and the Nasdaq Composite, once again, what else is new, right? Once again, it closed at a new all-time high. But all the other indexes is basically just same old, just flopping around within that consolidation area, that consolidation zone, and just waiting. We're just waiting for something to happen, waiting for it to either break out of this consolidation area or break down from it. And we're basically just still waiting. And the NASDAQ just keep on chucking along. And it's the same culprit, that is, the machine is using to push the NASDAQ up. Look at Facebook. Right, nice weekly candle, bullish candle came down to this edge here and then bounced it right back up. And you see Apple, although it did not make a new all-time high, but it did close at a new all-time closing high. And here, look at Amazon still chucking along and put in a new all-time high and close at an all-time closing high. Same with Netflix, So you see that, nothing wrong with these chart here on these price action. The same thing with Google, although Google is not at the not at an all-time high yet, but it seems like it want to go there, so I wouldn't be surprised if it come up, peek its head, and tag this all-time high. So again, the FANG stock is still being pushed higher, and that's why the Nasdaq and the Nasdaq 100 index is making all-time high, while all the other indexes, such as the New York Stock Exchange Composite, the S&P 500, the Dow Jones Transportation, Dow Jones Industrial, and the Russell 2000 is still, kind of just fluctuating, bouncing around within that consolidation zone. So here, looking at this weekly S&P chart here. Oh, by the way, I have changed the background, the chart, to use a lighter theme, the light background. Let me know if you prefer this lighter background or the dark background, and let me know in the comment section below. Looking at this weekly chart, it is still continue to move along toward the upper end of this long-term megaphone channel. And if we zoom this in, you see that last week it made a outside bar, basically engulfing the previous week candle. And for the week, the range was 166 point or 5.25%, right? And it closed up on a weekly basis. Let's see, about 121 point, or a little bit 4%, a little bit over 4%, 4.02. And if we take a look at from the March low, it is 938 point above the March low, and basically have regained 42.8%. And from the February high, all-time high, it is 7.77% away from it, and just 263.5 point away from the all-time high. So, there's nothing wrong with this price action here. And the 40-week moving average, although it's kind of flattened out, but it is not declining. And the 10-week moving average is still, pointing upward, and the price is still above both of these moving averages. And essentially, on a bigger picture, the trend for the S&P 500 is still up. Here we are looking at the daily S&P chart here, and the S&P 500 did something extraordinary last week. You look at here, right? I have the line here separating the previous week to the beginning of last week. So this is Monday. Right? You see every day last week it went up, it closed up. So that's 4 consecutive days. Right? So that is kind of extraordinary when you see that it just closed up every day. Now, if you look at this, right? It make the bear feel like they are being left out and they are just being hammered because of the 4 consecutive update, and make the bull feel like, man, they're in a euphoria, right? They are euphoric about this move here. But in reality, it didn't really do that much, right? It's still inside of this consolidation range, this balance area that we've been looking at. So, but we're going to take a look at this, a little bit more detail later on. But let's first go and take a look at the market sentiment and the market internal and then see what they are telling us. Then we go back and take a look at the S&P 500 in a more detail. All right, looking at this sentiment chart here, you can see that the VIX is kind of sneaking back into this zone here, this 30 and 20 area. So it's coming back into this, what I call the neutral zone. And also the put call ratio, it is, sitting at 0.69 or 0.7, and it is coming up a little bit, but it is not overly bullish. Sort of in a risk on area here on, looking at these two sentiment indicators, the VIX and the put call ratio. So I would say I would call it in a little bit more of a neutral type of a sentiment. Neither is it fearful, or neither is it too greedy, too bullish. And here looking at the New York Stock Exchange up-down volume ratio and also the daily advanced decline, you see that on Wednesday here, the first day of the new month of July, it actually got a negative up-down volume ratio, although the S&P 500 actually went up. And again, also the advanced decline was very low. Right? If we take a look at that value, it is only 163 more advancers than decliners. And the up-down volume ratio was actually minus 1.598, so it's like minus 1.6. Even on Monday, when that snapback, and on Tuesday, right, that big run-up, you can see that the up-down volume ratio, it is not that impressive. On Tuesday, it was 2.18, and on Monday, that was the highest for the week, is sitting at 6.15. Although the advanced decline did come up on Monday, it was sitting at 1544, more advanced than the decliner. But it really should have been somewhere around 1,800 to 2,000, right? And you see on Friday, it finished off at 844. But again, on Tuesday, there's only 966, not even 1,000. Right? So you can see that this market is in, sort of just bouncing around and with no real conviction on the upside. But when the market is being sold off, you can see there are a lot of selling pressure come in, right? Remember last week we talked about these advanced decline like this right here, minus 23.94. And here this, minus 19.31. And the, up-down volume ratio favored the down volume, 10.28. And here is 5.9. Okay, so the market is definitely just kind of chopping around right now, right? And looking at the New York Stock Exchange new high, new low, you see on Friday that was the highest with 88 more new high than new low. The S&P was up almost every day for the entire week. But you see that these new high, new low is not really something to write home about. Right? It's not expanding while the market is trying to move higher. And the AD line for the New York Stock Exchange, we're still seeing this divergence here between the S&P 500 and the NYSE AD line. So again, we're still waiting to see, is the market going to be able to push higher with more stock, showing strength, or is it going to grind higher with less and less stock? And here with the Nasdaq making new high, only got 161 more new high than new low. I mean, that is pathetic. So again, the strength is not there to push this market. And it shows, right? We just went and took a look at what are some of the stocks that are really pushing this market up. It's the FANG stocks, right? The Apple, the Netflix, the Amazon, So those large cap tech stock is pushing it up. Here in the Nasdaq continue to show this divergence on the advanced decline line. versus the Nasdaq 100. Nasdaq 100 continue to close at new all-time closing high, but every time it does that, the advanced decline line is lower and lower, right? Making a lower high. Right? So that is not a positive sign for a market that is pushing and closing at new all-time high. Now let's take a look at the S&P 500 daily chart here and see what happened last week. See, on Monday it came down and took out the Friday's low. So it got the bear all excited, right? Then all of a sudden it just reversed itself, and that was it for the week. That was it, and it just continuously, move higher throughout the week. At the end of the week, we essentially see that it really did not do anything at all, right? It just came back up to this top of this range here. Although, it came back up and tried to fill this gap, it's still unable to fill this gap. Although it did fill this gap here, but it is unable to get away from this consolidation, this balance area, to come in and fill this gap and possibly move up and get to the next gap. So for next week, the upside scenario remain to be, to see would it be able to come up and fill this gap here, right? And then come up and get and tag this 3214.64 and possibly come back and recheck this gap fill level here, and then push up to 3259.81 and see would it be able to work itself up to this new gap area. And that is the upside scenario. Then for the downside scenario, again, we're basically looking for this thing is possibly come back to the lower edge of this balance area, and once again, would it break through and come down to this 618 at this 2934.49 area. So let's take a look at the S&P 500 ETF, the SPY. Just want to show you a couple tweaks that I put out before we go and take a look at this chart here in a little bit more detail. So here's a couple of tweets that I put out on July the 1st, on Wednesday. The first one, I essentially saying here are a couple of the scenarios that I'm watching on a SPY. The first one is, fill the gap, then possibly move to the 315.48. And that would be up here somewhere. We'll take a look at it a little closer on the chart when we go back and analyze the SPY. Essentially, it's up here, this composite value area high here at 315.48. And say if it's the other scenario is on the downside, say if it's unable to hold at 310.20, which is the Tuesday high, then look for it to pull back to the 308.47, which is the Wednesday low. And a bit longer term, if it unable to hold at 308, then we're basically looking for this thing to come down to the 303.82, right? So then later on, I updated the tweak and saying that the SPY filled the 311.61 gap near the close, and then it pulled back and closed just above the Tuesday high. So in other words, it went up and filled that 311.61. That's that gap, and then it pulled back, tested the Tuesday high, but it was able to close above it. So here's what I'd be watching for Thursday. Right? I said if it could move and stay above the 311.61, then I look for a move to get up to that composite value area high near the 315.43. Okay, and if it moved below the 310.20, in other words, move back below the Tuesday high, then I'll be watching to see could it hold above today's low, which is at 309.07. If it can't stay above the 309.07, then watch the LVN, the low volume node at 308.47, then move down to the composite VPOX near the 304 area. All right, this right here. Okay, so basically that's what I tweeted out, and this right here was tweeted out on in the evening, 7:11 on the evening on July 1st, and that essentially is was at 10:11 New York time. So let's go back to the chart here. So here's the Tuesday high here. This is the 310.20, and here is the Wednesday low, 309.07. So on Wednesday, it closed this gap here, filled this gap, and it closed underneath this 311.61, which is this gap level here. All right, so basically I'm saying that the following day, if it could hold above this level, then I'm looking for it to move up to this 315.43 or the composite value area high. And as you can see, it actually gapped up on the following day, came up and tagged this level and passed it a little bit more, then it kind of faded back down. And then on before the close, it actually came in and filled this gap, the Friday's gap here, before it closes above this 311.61. So now where is it going to go now, right, on Monday? So we're essentially looking at this consolidation area, right, this balance area. It hasn't been doing much other than bouncing around in this area. So if we take a look at here, right, when it come up, it pull back, right? When it come up, it pull back. So will this thing come up again and it will pull back down to this lower edge of this balance area, which is the 298.93 down in this range here, right? So we're basically looking at this consolidation range. Would it be, kind of bounce around and pull back once again? Or will this time actually will break out and fill this gap entirely? So that's the up-down scenario that we're going to be keep an eye on in the coming week, is to see would it be able to come up and fill this gap here, right? So the upside scenario is come up, fill this gap, get up to the 320.16, back test, and then push up to the next gap, into the next gap, up near the 325.85. Or would it come back down to this bottom of this balance area, continue to come down and work itself back down here, tag this composite point of control. But we're essentially looking at this 298.93 and see would it break this balance area and finally come down to this 618 area near this, between the 291 and 294 area. So that's basically what we're looking for the coming week. Now, let me go and update the volume profile. So I updated the volume profile to include last week's price action, and it really didn't change much. The value area high is 315.51, and the point of control is still down at that 304 area. Okay, so we're still looking at these level. It has to get above this value area high, fill this gap, and then move up to this 320.16 and possibly get up to the 325. Then the market have done something, right? Because right now it's really haven't done much at all, for the last month or so, because it's just been bouncing around inside of this value area. So we're going to see if we'll be able to come down and finally break through, break down from this value area. So in summary, looking at the S&P 500, it really hasn't done much for the last month or so. It is basically it's still been in a consolidation range and just been bouncing around here. Right now, we're just still waiting for it to make a move, either on the upside or come back down and bounce it again, and see would it make it, make a downside move and get into this retracement zone on this 618 near the 2934.49, and possibly get down to the 50% retracement level at 2792.69. So we're still waiting for something to happen to break out of this area here. So right now, last week, we could see that the S&P 500, made a head fake and trapped some of the short here. Got the short excited when it dipped below the 5 days low, and then it reverses. Did a lot of the bear got trapped here on this head fake, or is it the real head fake is yet to come? That this is the head fake that actually got the bull all excited, and then now it's going to come down and break this consolidation area And that's where the bulls actually get trapped. So which is which? Did we see a head fake last week, or the head fake is yet to come? Well, we're just going to keep an eye on it and see what will play out in the coming week. We got the scenario. So I hope you find this video informative, and thank you for watching. Have a nice 4th of July weekend. Good luck and stay safe.